Hey traders, Mike Sir here. Welcome back to my channel. Is there a trading strategy that allows you to accumulate multiple positions in the Forex market and turn that into a profit? A strategy where you don't need to be super accurate on the price levels as long as you follow the overall price trend. Well, there is. And in this video, I'm going to share this trading strategy with you and show you a live example of it using a computer program that I built that automates this trading strategy. So let's get started. What I'm going to share with you today is a trading strategy called gridding that allows you to accumulate multiple positions. It's a strategy similar to dollar cost averaging, where you accumulate positions as the price goes against you, with the objective that at some point the price will go in your favor and you will be able to make a profit from it. It's a strategy that works well in the Forex markets, and I'll explain to you why this is the case later. First of all, let me explain to you what a grid strategy is. It's a strategy in which the trader divides up the total amount to be traded across periodic purchases to reduce the impact of volatility on the overall purchase at a multiplier. So what it allows you to do is to be able to divide all your trade orders into multiple or many different price levels based on the market direction. This allows you to be able to keep averaging down or up on your initial position using a multiplier until your net position is in profit. And you don't have to use a multiplier, but it will help you recover your losses much quicker. So let me show you this illustration so you can better understand the strategy. So for example, if you look at the chart here, so let's just say you start off with a buy position of 0.1 lot at this level. Now if it goes down, then you would buy 2 times that, which is now 0.2 lots. And if it goes further down, you'll buy 0.4 lots, and then 0.8, and then 1.6. Now each time it goes down, you would buy 2 times the previous amount. So at some point, the price will stop going down and recover all your losses. And once it starts going up, you'll be able to make a profit from the overall position. Now, even though you were losing money in the beginning, it turned all your unrealized losses into a profit. The other benefit is if you're looking to accumulate a position of, let's just say, 2 or 3 lots, you don't need to buy it all at once. You can just buy it bit by bit, and this is a perfect strategy for you to be able to accomplish that. Now let me show you a Forex gridding example. So let's say your initial position is a buy and your position goes down. So what you do is you would initiate more multiple buy positions. So you can see here, so let's just say you start building a position at 0.1 lot position, and then the position starts going down. Then you buy 0.2 lots, which is 2 times the initial position. And then as it keeps going down, then you buy a 0.4 lot position. And then once the price stops going down and starts going back up, you can see here, you can take a profit right here. So at some point, the market will go back up and the average price of all your positions would be lower than the current market price. Now let me show you the math. So the first position that you did is you bought 0.1 lot at 0.90800. Then the second position you bought 2 times that in terms of lot is 0.02 lots, now at 0.90600. Then the third position that you bought is 0.04 lot at 0.90400. Then once the price reversed and went back higher, you exited at the profit price at 0.91000. Now assuming a 0.1 lot is equivalent to $1,000 US. So what I did is basically average the price of the 3 positions. So the first position averaged at 0.00908, and then you can see the second position and then third position. So essentially what I did is average the total cost of the 3 positions divided by the number of lots, in this case 0.07. It gives you an average price of 0.90514. So we exit the position at 0.9100. You minus the average price, which is 90514. You multiply by the number of lots times 100,000. It'll give you a $34 profit. So even though your first 2 positions were losing, it was able to turn that unrealized loss into a profit. Now there are some dangers of gridding that you need to be aware of. And that is if the market keeps going in one direction against you and you just keep averaging into your positions, there will come a point where you run out of capital. Now you can see from this illustration here is that if you start buying at 0.1 lots and it keeps going down, then you add 0.2, then 0.4, and then 0.8, and then 1.6, etc., etc. So what you want to do is avoid scenarios where the markets are trending in one direction. Ideally, the best thing to do in terms of accumulating positions is when the market goes sideways, as it allows you to be able to build a position in a more risk-controlled manner. And this is a major reason why this strategy works better for the Forex markets, which generally tends to move sideways, especially when you choose more stable currencies, while the indices or commodities generally tend to trend in one direction. So let me show you a real live example of a gridding trade. So we can see here the dotted line is where we want to get in. So we can see in that we already got into a position. Now we basically think, let's just say we think that the position or the price will go higher and we want to accumulate a position towards the area that you can see the solid green line there. So if it reaches a solid green line, then we will take profit. There's no need to add any multiple positions. So you can see here that if the price goes lower, we are looking to accumulate more positions of this FX. Okay, so now it initiates a second position. So we're gridding. So now we have one lot of a buy and a two lot of a buy. Now we accumulate 4 lots. So every position that we add is 2 times the prior position. So we have total 7 lots right now. And at the bottom of that area, we will look to exit position if it keeps going down. So you can see now it's rebounding. Now you can see that we have a profit. And basically for illustration purposes, once you see that solid green line there, that's when we look to exit of all our positions. And there you go. So let's review the trades. So you can see that we have accumulated 3 positions. So the first one is we bought 1 lot of the Euro USD and we had exited at that price for a loss of $43. The second position we bought was 2 lots of Euro USD. We have a profit of $114. The third position that we bought was 4 lots of Euro USD and we accumulated a profit of $620. So in total, we accumulated a profit of over $700. So this is again a perfect example of a gridding strategy where you don't necessarily know exactly what's the exact price that you want to get into position, but you know that it's going to head in your direction. So what this gridding strategy allows you to do is the ability to accumulate multiple positions and turn that into a profit. Thanks for watching. If you like this video and want to watch other videos where I show you all the tools that I use on a daily basis to analyze the financial markets, please click on the left for more videos and click on the right for the full playlist. I'll see you in the next video.